Yeah, so I'm back now. Yeah. So let's continue in that respect. So the cost of sales here, I'm going to bring the depreciation figure, right? So yeah, the depreciation here we're told is 200. It's 200 in this case, and we are supposed to take it to cost of sales. So yeah, we are going to add the 200. Remember, we have 3 zeros on top, so we'll add a 200 in that case, and then we are done with the depreciation aspect. Let's go to IIR. Is Felix around?
Yes, sir. Yes, sir. Okay. Note 3. The policy is small. Okay. The policy of Kingdom Limited Group is to value all properties to fair value at each year end. On December 31st, 2019, the increase in Kingdom Limited's property has already been recorded. However, a further increase of 1.2 million in the value of Paradise Limited's property since its value at acquisition to 31st December 2019 has not yet been recorded.
So yeah, where there is a revaluation of 1.2 million, which will form part of your gain on revaluation. So I think we had that over here. So gain on revaluation here, we already have 3,000 here. We tell that there's an additional 1,200 which has not been recorded. So if you do that over here, after you have brought your profit attributable to the next item, as you know, is the OCI, you bring your revaluation gain in this case, which is the 3,000 here plus the 1,200. The 1,200. Remember 3 zeros on top, so 1,200 in this case. So that you account for that. So that's the only thing you do in respect of the additional information. Let's move to the next one, Ivan.
Kingdom Limited made sales to Paradise Limited throughout the year 2019, and it had consistently been 600,000 cedis per month. Kingdom Limited made a markup of 25% on all of these sales, a total of 1.2 million. That is at cost to Paradise Limited's inventory at 31st December 2019 has been supplied by Kingdom Limited during the post-acquisition period.
Okay, do you have any adjustment that will relate to profit and loss in this case? Yeah. Your hand is up.
Yes, so please, I raised my hand before you ask the question. Is it okay if I ask my question?
Okay, you got it.
The 1,200 under the revaluation gain, I thought the 9/12 will affect it.
Nope.
Is why?
Okay, let's go back. Okay, it says a further increase of 1.2 million of the value of the Paradise Limited's property since its value at acquisition 2. So acquisition 2, 31st December 2019. So it's already 9/12 already.
Okay, thank you.
You're welcome. Okay, let's come back to our Ivan. Do you have any item in Ivan that relates to? Okay, Isaac.
Yes,
Okay, yes. What item is that?
PUP.
Provision for unrealized profit. Okay, is that the only item? Any other person? Is that the only item? Yeah, provision for unrealized profit is part. What else? Yeah, Martha.
In,
Intra-group sales.
intra-group sales. So yeah, it's two. We have provision for unrealized profit, and then we have intra-group sales. So first, let's look at the intra-group sales. What's the intra-group sales we made here? They said that Kingdom made sales to Paradise throughout the year, and it had consistently been 600,000 per month. So bear in mind that you end up giving you 1 month value to be 600, and yeah, you know the number of months you are dealing in this case, right? How many months are we dealing?
9 months.
9 months. And to account for intra-group sales, we said you have to less it from your revenue, and then you less it from your cost of sales. Because one entity will record it as part of its revenue, another entity will account for it as part of its cost of sales. So we'll do that over here to be 600 times 9. Then we'll do that for cost of sales as well. 600 times 9. Then the next thing we do is to account for our provision for unrealized profit. I remember the procedures we spoke about for provision for unrealized profit in our normal class. We said first thing you have to estimate is what is the value you have in your remaining in your inventory. You first have to find the value remaining in your inventory. And usually the question will give you the details for that. So you can see clearly here, the question said that a total of 1.2 million of Paradise Limited's inventory at 31st December had been supplied by Kingdom. So out of the sales that Kingdom made to Paradise, the remainder left in the books was 1.2 million. So you first hold on to that figure. And the next thing we do is you need to check whether you are going to apply markup or margin. So the 1.2 million, is this sales or cost price? Is it a sales value or is it a cost price value? Yeah, hand is up. Let me see who's on us first. Johnson, yeah.
Yeah, it sales
It's sales. How do you know it was sales?
because that was the amount Kingdom sold to the experiments.
Yeah, that was the amount Kingdom sold to Paradise. Yeah, so
That's it.
according to Kingdom, that will be the selling price, and then to Paradise, that will be the cost price. So yeah, right. So there's the sales value we have there. Then we apply the provision for unrealized profit on it. So yeah, we have a sales value, but let's check the percentage we have been given. We have been given a markup. Can we apply markup on the sales? Can we apply markup
No,
on the sales?
no.
No. What are we expected to do?
Change it to margin.
Change it to margin. So yeah, the markup we have here, we need to change it to margin. So how do we do that? That will be 25 over 100 plus what? 25, right? And that will give us 25 over 125. So we'll get 25 over 125. So that's what we are going to use in that case. That's what we're going to use in that case. The hand is up. Yeah, Abigail.
Yes, sir. Please, I want to know how the markup, how is it done? Like,
Oh,
how will you know it's a markup? How will you know it's a margin? Like, I want
it
to know.
is there. It's in the question. Markup of 25%.
Okay, but you asked that are we going to use it with a markup or we'll change it to the margin?
And so you have to know the principles for markup margin. Markup margin. I don't know. Okay, you let me just say. Okay, so when you're doing it, yeah, we have 1.2 million. You can do you understand that 1.2 million is the sales value?
Yes, please.
Okay, so once you understand the sales value, now in costing principles, if 1.2 billion is the sales value, we calculate margin on sales. So if you want to get a percentage of profit. You calculate your percentage of profit margin on sales. So
Oh,
once you have identified that 1.2 million is a sales value, its corresponding percentage should be margin. You get it?
okay.
But
Yes,
when we checking the question, the corresponding percentage we're giving rather was what?
markup.
Yeah, so that's why we have to change it from markup to margin.
Okay. So does it mean the markup is for what? If the sales value is for the margin, the markup is
Markup is for cost price.
oh, okay. Okay. All right. Thank you.
So let's do that in this case. So we account for the provision for unrealized profit. How do we account for the provision for unrealized profit? Or let me just say, so we account for it under your cost of sales, right? And remember we said for provision for unrealized profit, you have to add. So let's do that in that case. The value is 1.2 million, that's 1,200. We multiply by the 25 over 125 to get a value in that case. Let's move to the next one. Let's go to Vince.
At 31st December 2019, Kingdom Limited had a trade receivable balance owing from Paradise Limited of 2.4 million. However, this did not agree to the equivalent trade payable of Paradise Limited as a result of a payment by Paradise Limited of 800,000 made in December 2019, which did not reflect in Kingdom Limited bank account until 4th January 2020. Kingdom Limited's policy for cash timing difference is to adjust the parent's financial statement.
Okay, thank you. So this transaction, does it relate to profit or loss? Does it relate to profit or loss? Okay, no one is speaking, so it doesn't relate to profit or loss. It relates to position. So we'll come back to this. This one relates to position. So we'll come back to it. Let's move on to BI over here.
Okay, VI. Kingdom Limited on December 2019 accepted a 1 million 10% loan note from Paradise Limited.
Okay, does it relate to profit or loss?
No.
No.
No, okay. Yeah, bear in mind that someone will talk about the interest, 10%, but look at the date. It's on December 2019. So it's at the end of the year. So interest will not yield for any number of months. So you're not going to consider that in profit or loss. Okay, let's move to VII.
At 31st December 2019, the goodwill that arose on acquisition was impaired by 1 million. Kingdom Limited has a policy of treating goodwill impairment as part of administrative expense.
Okay, so yeah, the impairment, we have impairment on goodwill, 1 million, and we are told to account for it as part of our administrative expense. So we'll go to administrative expenses here, and then we'll add the 1,000 in this case. Then these ones do not relate to profit or loss, so we are done in that case. So let's do the adjustment for each. So someone should sum the first one up, another person should do the cost of sales, another distribution cost in that light.
Question, please.
Let's finish with the adding.
Okay, sure.
So the first one is 164,800.
164,800. That's the next one.
122640.
122640. Then distribution cost.
5800.
Distribution cost.
5800.
5,800. Admin expenses.
107,700.
Is it 10,000 or 1,700?
10,000.
Okay, finance cost.
603.
610.
3.
And
3.
3.
Okay. Then we sum it up. So income tax.
7,700.
7,700. Then here we share to get a parent and NCI. So remember we have to do our workings, our standard workings we spoke about. So we'll do that here. So NCI profit. We said we first we start with a subsidiary profit for the period. How do we get a subsidiary profit for the period? So first we go to our question here. You see that we have the profit for the year, and there is the amount for the subsidiary 4,000. So we bring that there 4,000, and we say for the period. We are consolidating only for 9 months. So that will be 9/12. What will be our answer in this regard?
3,000.
I didn't get you.
3,000.
3,000. Okay. The next thing we do, we need to check the other items that will come here. So we made mention of certain few things. Let me refer to that at the top here. We need to check fair value adjustment, the depreciation we had over here. We had a depreciation from fair value adjustment, right? If you quite
Yes.
remember. So
Yes.
we'll bring that
200.
one here. So depreciation from our fair value. It was 200 there.
Yes.
Okay. Then we move to the next.
There was impairment.
We had, do we have a provision for unrealized profit that the subsidiary was selling to the parents?
No, I think it was parent to subsidiary.
Exactly. Then we had impairments.
Yes.
So impairment was 1,000. We'll bring that. So we sum them up. And this is our adjusted profit. Then we calculate for the NCI profit. which would be our NCI percentage. What's our NCI percentage? Remember that parent is what, 60%, right? So
Yeah.
NCI was 40%. So we multiply by 1,800. What do we get?
480.
480. So that becomes the value for our NCI profit, 480.
Sorry, 720. Sorry.
720, okay. So yeah, we get 720. And then we look for that of a parent. So to get a parent here, you bring the total profit we had, which was 17,357 minus the 720. What do you get?
166,375.
166,377.
One person, can one person just speak? So raise up your hand, one person speaks then. So no one is up. Yeah, Faustina.
16637.
37. Okay. So that will still give us our 17,357. Then we come to the OCI here. We had 3,000 plus 1,200. That's 4,200. We sum it together. To get total comprehensive income. Then here too, we need to share for parents and then subsidiary. So we'll have to share for parents, and then we'll do that for NCI. So first we have to calculate for that of NCI. How do we do that? We have to see, here we have our NCI profit. So we said to continue with your NCI total comprehensive income. The first thing you bring is your NCI profit. So the same value we had here, you bring that first. Then you check if NCI will partake in any share of impairment. And here the NCI will partake in the revaluation that occurred after that was 1,000. Do you remember? The NCI will partake in that 1,200 over here. So we are going to share that. So the NCI OCI is only one aspect. The first one relates to only the parents. So it's going to be 40% on the 1,200. And what are you going to get? 40% on 1,200. What will be the answer? Yes, that. What will be the answer?
Sir, please, we'll get 480.
480.
But sir, please, we did you didn't edit the 480, the previous 480. We
It's
had
720.
720.
Okay, okay.
Yes.
720. So that is with 480. Okay. So that will be 720 plus 480. So that will give us 1,002. You bring that here. 1,200. And then to get that for the parents here, you bring your total comprehensive income here, which is 21,557 minus 1,200. What do we get?
In my journey, we different in
Hey, mute
a
yourself.
religion.
Mute yourself. Yvonne, please mute yourself.
Five. And then there's two for number. And then you're better.
Faustina.
You're better.
Yvonne. Yvonne, Yeboah, please mute yourself.
There's two. I'm not a baby.
not the admin, I would have done Flourish. Is Flourish around?
Constance. Then, when I goes, hey, what are the word they use?
Now, some of the trouble.
What's it?
We over throw.
When I met Waka, financial reporting, the constant trend. But we're a different organization, the end of my journey.
No, passion.
Where flourish, the Ben, I'm not even free, you're on this guy. I'll put my journey, not just say,
Hey,
I saw no method.
Yvonne, Yvonne, please mute yourself.